Hello, and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We are both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have any thoughts of topics you would like us to cover. You can contact us by email, and our email addresses are at the bottom of your screen. Now, Andrew, I have been hearing that school fees could be getting more expensive, and this is nothing to do with inflation, but because the Labour Party have a proposal to add VAT to private school fees. This got me wondering whether there is any planning that can be done.
Okay, before you go any further, can I just say, if you're intending to do an episode on VAT, I am leaving now.
Come on, I'm with you on that. So no, let's not talk about VAT. But I do swear that when you and I sort of started in tax many years ago, there were school fee planning options, but I'm not so sure that any of them still exist.
Um, I know there are some old school ideas, pardon the pun, that definitely don't work, but there are some things you can still do as well. So, to meet my natural way of seeing the world, let's start pessimistically. When I was a lad, you could actually get tax relief on deeds of covenant, making gifts to family members to pay school fees. That's so long ago, I'm not going to waste your time explaining how it worked. But the point is that these days you can't claim tax relief on gifts or on paying personal expenses like fees. Another thing that doesn't work, but that we still see people trying, is parental gifts into trust. So the idea here is that mum puts money into a UK trust for little Tarquin, and Tarquin takes income distributions, which he then uses to pay his school fees. Now, the logic is that Tarquin pays tax on the income distributed out of the trust at his tax rate after personal allowances, which could be nil or 20%. And he gets a tax credit for the tax paid by the trust at 45%. Now, if that worked, it would mean in lots of cases, Tarquin would actually get a refund of tax from HMRC.
And of course, the idea here is that you end up with the investment income being taxed at the child's tax rate rather than the parents', which of course would be really efficient. The problem is, though, as you say, it doesn't actually work if mum settles assets in the way that you have described. But there is another approach which you could take that's not too different, where you can get exactly the same outcome.
Right. So, firstly, the reason my version doesn't work is because if mum settles assets into trust for the benefit of her underage children, the trust income will be taxed on her rather than on Tarquin. So it's as if the trust didn't exist at all. On the other hand, though, if grandparents settle the money into trust, you don't have that problem. So grandparent gifts into a UK trust can fund school fees really efficiently.
Yes, but that's not the only problem, though, is it? In your example, Tarquin was paying the school fees. In practice, you can't do that as the school just won't contract with a minor, with one of their
Yeah.
pupils.
Yeah.
What does work is if the school contracts with the trustee, again, going back to your example. So the point here is that you need to get the details right to get the outcome that you want.
Exactly. And there's a really common mistake where the parents contract with the school and the trustee reimburses the cost to them. The problem with that is the trust is then providing a benefit to the parents, not to the child, because it's the parents' liability to pay the fees. That means that the parents are taxable on the benefit and you're back to square one again.
Okay, so that's how to make good use of your grandparents. But is there anything else that you can do?
Well, for a start, you could lean on other family members or friends for that matter. The key point is that it's not the parent providing the funds. What you can't do, though, is a sort of a you scratch my back, I'll scratch yours arrangement. We know that because there was a court case many years ago now where family A set up a trust for the children of family B, and vice versa. And the court said, you're not fooling anybody. Now, that was back in the days when a lot of legislation was interpreted literally, and you could get away with a lot more. So the chances of being successful now are even lower.
And we've talked before about family investment companies, and I suppose those could be an option here. If you have a different class of share for each child, that can pay dividends, you still need the children's shares to be paid for by somebody other than the parents. And of course, you still have the practical issues about who is going to contract with the school.
Yeah. So the bottom line for income tax purposes is if the money from which the fees are being paid ultimately comes from the parents, any income associated with it will be taxed on the parents. And it really doesn't matter how you structure things. That doesn't mean you can't do parental planning. And lots of families will put money aside when they have it to prepare for future costs, but it won't be being done as a tax efficient thing. If you are thinking about putting money aside to cover future fees, I think make sure that you max out your ISA as a first step so you get tax-free returns on the money you're investing. Beyond that, it can make sense to use a bond wrapper so that, again, growth can roll up tax-free. You need to bear in mind that it's the parents that will be taxed if you make excess policy gains. But this can actually be a good thing for university fees, because in that case, if you give the policy away, there's no immediate tax charge. And if the child cashes it in when they're over 18, the gain, again, will be taxed on them, not on you as the parent. So that can work quite nicely.
Yeah, that makes sense. But turning aside from income tax, you can pay for school fees in an IHT efficient manner as well. And this is another one that works particularly well where grandparents are involved. So on a simple basis, if the grandparent pays fees on a regular basis out of excess income, then those gifts will be immediately exempt from IHT rather than being treated as potentially exempt transfers where the donor needs to survive for 7 years. And then a refinement on this would be to combine the payment of school fees with a discounted gift trust. So the idea here is that Grandad settles an amount of capital into a trust, but the trust's terms are that he is excluded from benefiting from the capital, but he does receive a fixed income for life. And the effect of this is that the capital gift immediately leaves his estate, but the value for IHT purposes is reduced because of the income right. And if the annual income being generated is not required for Grandad to live off, he then uses that to make the school fees payment, which takes the income out of his estate for IHT purposes immediately. So this doesn't do anything from an income tax perspective, but it can be a really efficient way to do a little bit of estate planning.
Yeah. So I think in summary, if you're going to pay your children's school fees, there is no clever way to do it tax efficiently. On the other hand, if you can twist the arm of family or friends to foot the bill for you, it can result in a much more efficient position for income tax and inheritance tax. So my advice, in summary on all of this, is you just have to make sure you do it right and that you pick a really rich godparent for your child.
Oh, if only we could all do that. Anyway, so have you got a recommendation for us this week?
I do. I have a sort of summer recommendation.
Okay.
So this is a singer and composer and musician called Agnes Obel, Obel, and I would particularly recommend Citizen of Glass or Aventine as good starting points. She has one of these it's quite an ethereal voice, music with pianos and cellos, it feels very sort of summery and floaty, and it's really, really beautiful. Gorgeous music, fantastic of a summer evening to chill out to. Agnes Obel, Obel.
All right, I'm going to look her up. Very good. Thank you all for listening. As usual, please do let us have your comments or feedback, and we can be contacted on rachel.d'souza@rsmuk.com or andrew.robbins@rsmuk.com. That's it for this week, so until we see you next time, bye for now.
Bye.